Yeah, I think it's very, very interesting to see how Chinese companies like Alibaba is now able to come up with very advanced large language models, and also on the AI chips front, developing the next generation chips. I think these are all something that I would say not very surprising. A lot of these new models are coming up with very significant parameters. I think they're catching up. The Chinese players are catching up very quickly with the U.S. counterparts. And we are seeing an emerging race between the U.S. and Chinese players when it comes to AI. So we can expect to see more of these kind of race coming. When there's a race, nobody's slowing down.
Yeah, I wonder what you make of the latest developments, not so much the talks going on in Madrid, but what China has been doing almost concurrently, and that is, a probe into, an anti-dumping probe into analog U.S. chips going into China, which I find odd because China is perfectly capable of making chips like that themselves. And at the same time, they're complaining about U.S. export restrictions on the kind of chips that they do want. How much of this is performative, do you think?
A lot of these have to do with tit for tat. I think when it comes to analog chips, the U.S. Analog chip companies still dominate the market. A lot of the input-output type of functions that we see for AI or for automotive, there are still analog chips that are produced by U.S. players. China is catching up, but China still has a very significantly low market share there. So a lot of these, I think, are preparing ahead of the discussions.
All right, we keep talking about the AI trade, the tip of the spear, names like NVIDIA, et cetera, and big question mark hanging over that group, obviously, since that DeepSeek moment is CapEx, right? Whether they're going to continue to ramp that kind of spend. When you take a look at what Oracle just came out with, the numbers that they had for, I think, the following 3 or even 4 years, anticipating those kinds of revenues, it seems to put to rest or put to bed any concerns that the CapEx ramp is going to be fading anytime soon. Is that fair?
I think if we look at the CapEx numbers for AI data center infrastructure, I don't think they're coming off anytime soon. I think we're just starting to see more acceleration. Think of the tech dinner in White House about 10 days ago. There's a lot of discussions about investments in the U.S. and a lot of these investments are going to take time. We're looking at least the next 3 to 4 years. And if we look at chip supplies, they're actually not sufficient at the moment. As we speak, we are actually seeing a lot of new developments. For example, price hikes on certain memory chips, such as flash memory and so on. So a lot of these are just at the very early innings. We're not expecting any slowdown. Obviously, there will be volatility as supplies and demand pulls ahead. But I think a lot of these AI capex will continue to accelerate.
I got to ask you, though, are investors going to give them that window of time, 3 to 4 years, right? Because with that kind of aggressive investment, the problem is, with the exception of, let's say, Meta, maybe Microsoft, right? Nobody else seems to be able to start monetizing or delivering returns on those investments. So, if investors are going to have to wait another 3, 4 years, do they have that kind of patience, especially with so much of the market right now, so much of capitalization concentrated in just a handful of stocks?
Yeah, I think a lot of people ask about how is monetization ROI on these AI infrastructure going to be. I think they're emerging very quickly. As you mentioned, apart from Meta and Microsoft, a lot of other players, the U.S. Tech giants, they're just starting to monetize on AI. If we look at companies like Google or Alphabet, they're also already monetizing on AI very, very quickly through searches, through advertising, and so on. And beyond that, you're looking at companies like Oracle. They've got big contracts at the same time. We're seeing the usages of ChatGPT or the likes. These are ramping up very, very quickly. Monetization is coming. And I believe that there will be more applications coming online. For example, I'm wearing an AI smart glass at the moment. This is one great example of AI. Monetizations come through a lot of new use cases. And companies like Meta, they're going to come up with a lot of these new use cases where users will be willing to spend more with the help of AI, pushing a lot of more convenience to their daily lives.
So this is fascinating. You're wearing AI glasses. Whose are they? What do you use them for? I'm curious.
This is, for example, a Ray-Ban Meta. Today I use them, for taking pictures, videos, sharing them with my wife very quickly, on Messenger, WhatsApp. These are just some of the very early stages of use cases. But going forward, you'll have micro displays on these smart glasses pointing you to directions to where the closest cafe is, where you can, get your best coffee and so on. And these are, for example, we'll see more of these type of applications or AI smart glasses from companies like Google. They're working with, for example, companies like Warby Parker, Gentle Monster, and many of these. In fact, I also got another pair of Oakley Meta, and I run with them in the morning. And these are, very interesting use cases. But going forward, we're going to see a lot more of these interesting killer apps to come.
Wow, really interesting. So it sounds like, YT, you're an early adopter there. Talk to us about what's going on in China, the flip side, right? Since that DeepSeek moment, there's been an explosion of AR and also startups. So the model there, obviously, is not so much dependent on private capital, although they're likely going to have to play a part, even if PE and VC have been pretty dry in China the last 5 years or so. But the government is pretty intent on putting money behind it. They're not short of money. How's the build out there going to go? Because one thing I worry about is, when we think about AI, we need to think about data centers as well. Very capital intensive. That is still investment, right? But at the end of the day, AI has the ability to help a lot of Chinese companies and the economy in overall increase productivity, something they've been needing to do for quite some time. When I think about that, I think of costs coming down as well. And we talked about how Baba's new model can be built 90% cheaper. Where the U.S. hyperscalers are under pressure to deliver, to monetize, to commercialize, to show return for all their investment, for the Chinese companies, right, the Chinese AI startups, are we going to see the same model develop that we're seeing play out with EVs, that we saw play out with solar panels, right, which is, look, they drive costs to the bottom, kill each other while they're killing everybody else. And, okay, fine, the consumer benefits, but, not many companies are left standing. What do you think?
Yeah, I think China is developing a very different roadmap in AI. The U.S. players are focusing on what we call the frontier models, where the development and the investments are requiring significantly bigger amounts of money. But when it comes to the Chinese companies, they're really focusing on the applications where the cost is significantly lower. It's very similar to what we've seen with companies in the smartphone space, where Apple's developing the best smartphone hardware and so on, whereas companies in China such as Xiaomi, they're developing lower end kind of solutions comparable to a super high-end smartphone from the US, but they don't necessarily need the best hardware. They're tailored for the very affordability that requires by the Chinese market. And this is going to be very similar to what we're going to see in the AI infrastructure space. China is focusing on self-sufficiency, which means they're going to develop their own AI chips. And these are not going to be comparable or directly competing with NVIDIA or AMD's most advanced chips. They're going to complement. And in fact, they're going to focus on very cost-efficient type of solution And what that means is going to be a lot of these numbers that you're going to see coming out from Chinese companies, they're going to be significantly lower. Chinese always have, pioneered in a more cost-effective development model, focusing on applications. This will continue. And I think this is very interesting. When it comes to applications, Chinese companies are typically very innovative, taking what they've seen in the Western world and developing something for their own market, and specifically focusing on affordability. But when it comes to the AI use case, I think it's not going to end up like what we've seen in the electric vehicle market. Maybe in the humanoid robots area, there will be a lot more competition. But when it comes to AI, you're seeing that, given the intensive capital that is required, only major tech companies in China are able to do that. And also resources are very limited. So I think a lot of these are going to continue to emerge over the next few years.